Alrighty guys, what is going up? Welcome back to another episode. In today's video, I really want to talk about the top growth ETFs. So I hope you guys enjoy it. If you get anything of value, hit the like button and subscribe to the channel. If you guys have any questions or concerns, go ahead and ask them down in the comments. And if you guys want to learn more about investing in the stock market, go ahead and check out my course. And you guys can use promo code DIVIDENDS to get 50% off. We talk about fundamentals, technical analysis, how to find undervalued stock. We talk about REITs, dividends, retirement, taxes. We pretty much talk about it all. So I'll put a link to that down below so you guys can at least check it out. So now the top growth ETFs, here we go. Roll the intro. Let's go. Come on. Bam. So now before we talk about the top growth ETFs, let's talk about what an ETF is. Well, an ETF is also known as an exchange traded fund. Now the beauty of ETFs is one, you can invest in other things other than stocks because they have gold ETFs. They are coming out with Bitcoin ETFs. They are coming out with different things, so it's not just companies. Now the beauty of ETFs is one, they're a lot lower risk than just one stock because an ETF has pools of stocks. Some ETFs could have hundreds of holdings in it. And now the beauty of it is it's diversified and it's a lot lower risk because when you buy just one stock, that stock could fall down, that stock could go up. There's a lot more risk involved. But if you have 500 stocks, your risk level ultimately drops down because you have multiple different holdings in the ETF. Now, in my personal opinion, I really believe ETF investing is probably perfect for 99.99% of people who just want to invest. The reason why is because you don't have to actively manage it. Compared to stocks, you have to manage it if it hits your price target, if it hits your stop, if it hits your trailing stop. You have to set limit orders. With ETF investing, it's a long-term investment that you don't really have to check the day-to-day price on. It's a beautiful way to invest. Now, the beautiful part about growth ETFs is they have a ton of different companies in it. They have companies that have a ton of growth potential, but you're still diversified into multiple holdings, so your risk level is a lot lower. So now let's talk about the top growth ETFs. Alrighty guys, so the very first ETF here that I want to talk about is ticker symbol VUG. This is Vanguard's Growth ETF. Now, the reason why I love this is one, we have fantastic holdings in this. We have companies like Apple, Amazon, Microsoft. We have companies like Facebook. But the thing about it is we're not just heavily invested into those blue chip stocks. We still have a ton of smaller firms, smaller companies in it. So we still carry a lot of growth in that sort of aspect. Now, the year-to-date performance here is around 37%. Beautiful, beautiful growth with a very, very low expense ratio coming in at around 0.04%. $4 for every 10,000 you have invested. Very affordable because honestly, if you compare it to a mutual fund, mutual funds charge around 1%. So in the long term, that's going to kill you. So you want to make sure whatever fees company's going to charge you under 1% because you'll make a lot of money in the future here. Now, another thing I like about this is you guys can see this yellow line here. This is what you call a 200 moving average line. You can see that this has a tendency to act as support. Buying pressure, buying pressure, buying pressure, buying pressure. So with it selling off here, I really believe that one, this is a perfect opportunity to invest. Two, you're not going to be buying on these highs here. It doesn't make sense to buy in the highs. You always want to make sure you buy when the ETF sells off because you understand companies like Apple, Microsoft, Facebook, they're not going anywhere anytime soon. So this is a perfect ETF to hold for the long term here. Now, the second growth ETF is what you call a small cap ETF. So what this is it carries a lot of smaller companies in it. This is ticker symbol VBK. VBK, I said that really weird. But look at the growth here. The year-to-date performance or the 1 year performance is around 49%. Beautiful growth. But with that, it does have a little bit of a higher expense ratio coming in at around 0.07, $7 for every 10,000 you have invested. Super affordable. Now, the thing about this is diversified into a ton of awesome sectors. So we have 22 going into technology. We have another 35 going into healthcare, and it's diversified across hundreds of different stocks. So you don't carry a lot of risk. It's a beautiful way to invest here, in my personal opinion. But honestly, looking at this, you guys can see it's a very, very similar chart here to the other one. This yellow line, 200 moving average line, has a tendency to act as support. So we got buying pressure, buying pressure, buying pressure. Now the growth. Now a perfect strategy for pretty much all of these ETFs, guys, is dollar cost averaging. So you don't have to put up a ton of money all up front. You just have to be consistent with your investments. Even with a $10 per week investment into an ETF like this, over the course of 40 years is going to add up to a lot of money, especially when it's getting returns as high as 49%, which is crazy, but definitely one to invest in here. Now, the third one here is ticker symbol QQQ. This is pretty much just a NASDAQ ETF. So this is a very, very heavily tech ETF. Now, tech is high growth, in my personal opinion. That's why I put it in here. The year-to-date performance, or the one-year performance, is 45%. Now, looking at support and resistance up here at these highs, support here at around 310. Beautiful growth, really likes to use this 200 as support when it's above it, and then now as it fell below it, it has a tendency to use it as resistance. That's why we got sell-off in that point in here. But the beautiful part about this is, obviously, these companies in it are not going anywhere anytime soon. We have companies like Google, we have Facebook, we have Amazon, we have a ton of awesome tech stocks that aren't going anywhere anytime soon. Not to mention, you get paid a solid dividend so you can start compounding your money. It's a beautiful way to invest with, honestly, low risk but still high reward because you're diversified. Now, the next one here is probably one of the most popular growth stocks out there. This is Vanguard's Tech ETF. So this is ticker symbol VGT here. I put it in wrong. Look at the growth here with one-year performance coming in at around 47%, expense ratio coming in at around $0.110 for every $10,000 you have invested. This is a beautiful way to invest in a ton of awesome tech stocks. The top couple here are Apple, Microsoft, Visa, Nvidia, PayPal, and a ton of other ones. But look at the growth here. Beautiful growth. Not to mention, you will get paid a solid dividend so you can start compounding your money. Look at these basic support, basic resistance. You guys can see resistance, tendency to act as new support. Now, it does have a tendency to use the 200 moving average line as support. If you guys don't have the 200 moving average line on your charts, you need to get it. All you got to do is literally go to studies, edit studies, add, and then put it in here right here. It's a very, very awesome study because you can find all the supports and resistance lines and instantly know the direction of this ETF here. But that's a perfect one to hold for the long term. Now, the last and final growth ETF that I want to talk about is one backed by ARK. Now, this is ARK FinTech. So this is financial tech. So we have companies like giants, like Square, like Zillow, a lot of other ones here, as you guys can see. Beautiful growth, has a tendency to use the what as support? 200 moving average line. Buying pressure, buying pressure, buying pressure, buying pressure, buying pressure, buying pressure. So why aren't you using it? The year-to-date performance for this is the largest here that we talked about with 119%. Absolutely crazy. But with that being said, what often comes with higher growth is higher expense ratio. So this is at around 0.75%, almost $75 for every $10,000 you have invested. So that's a lot of money here, especially for fees. But I obviously believe if you're getting crazy performance like that, 120%, that doesn't really matter, the expense ratio. And it's backed by ARK Invest, so that is managed by Kathy Wood. This is a beautiful growth ETF here, and I highly recommend it because fintech, financial tech, we're only going to get more and more reliable on it and only going to start using it more and more and more. So there's a ton of potential for that one here too. So that is it though. I hope you guys enjoyed the episode, and if you did, hit the like button and subscribe to the channel. If you guys have any questions or concerns, go ahead and ask them down in the comments, and we'll see you guys later. Remember to stay happy, stay positive, and stay safe out there. Take care. Bam!